Morning, Brigitta. How are you?
Good. How are you, Chris?
I'm well, thanks. What's news in your world?
Just busy.
Busy? Yeah,
Christmas is always a busy time.
it is.
Things need to be done before Christmas so that
Correct.
everyone can go away and enjoy their month-long holiday in January. So
That's kind. I'd love a month-long holiday.
I
think
know.
that
When
sounds
I
good.
say we, our clients, not so much us.
Not so much us. Yep.
But yeah, same old on that front. What
Good.
about you?
Yeah, just really getting prepared for Christmas with the run-in. Andrew, who many of you would know, I think the other week, but he turned around and said there's 11 weeks till Christmas. That felt like it was 2 weeks ago, and now there's maybe 6, potentially,
Yes, that's right.
which is mildly terrifying.
That is terrifying.
Yeah.
But on the flip side, we've started playing Christmas carols again.
We have, thank you, to you.
I know.
Yep.
I've started to slowly integrate it into the office playlist from October, much to the annoyance of everyone else in the office.
That's
but
right, not me. I love Christmas carols.
it's okay. They can be Grinch, and we can be
Yep, correct.
happily
Yep.
moving along.
We were happily singing along to Christmas carols this morning, so
We
yep.
were.
Well done, well done.
Sometimes.
But we're heading into Christmas, but there is a lot going on in financial markets at the moment.
Yes, which really hasn't been the story for the last 6 months.
Yep.
So this is actually the first time in a while that
Yep.
something's brewing in the market, and
Yep.
from a variety of things, I would say.
Yeah, correct.
So,
Well, I think there seems to be just a little bit of worry at the moment, as you would probably see for those clients who are watching their portfolios. I guess there's been a little bit of a pullback probably in the last month.
or so?
Yeah, I was just wondering if it's month or week. Yeah.
Yeah,
But-
it's starting to come down from I would say a month,
Yeah.
end of October.
Yeah, and I guess there's lots of headlines out there. AI bubble. Obviously, we've had over the last couple of months, we've had people queuing for gold. So there's the question around gold, which we've sort of done a podcast on previously.
Yes, wonderful podcast by Lynn
yep.
Cameron.
Interest rates. What does that mean for interest rates? Because inflation seems to be going back up rather than coming down. So there's quite a few things going on in the markets at the moment.
There is.
But
Where should we
nothing.
start?
Well, let's just start and then see how we go. So, key points.
RBA hasn't really made a strong conviction about another interest rate cut. The last cut has certainly improved market sentiments.
Yep.
We've seen house prices coming back up. With spring, although it doesn't really feel like spring, but with spring season in full swing,
Yep.
there's been some great results
Yep.
for sellers out there. Not so much for buyers, I would say. Although that sentiment of interest rates has also been, I would say, improved because of the recent 5% deposit
Yeah. Yep.
issue that the government has launched. So it's a great step for a lot of first home buyers, I would say, rather than having to wait for another 10 years to...
Yeah, that's the hard part, isn't it? The amount of time. If you're on an average salary, what you need to save a deposit it's a long period of time.
It is, because if you think about it, the amount that you're paying for rent quickly adds
Yeah.
up to the deposit amount, but you
Correct.
can't really not pay rent and then save for that at the same time.
Yeah.
So we've got that going in the market, and well, unfortunately, RBA's just said that for any further interest rates to come down, the labor market needs to
Yep.
change a bit more dramatically.
Yep.
And employment-wise, it's always a bit of a hard one to discuss, because at the same time,
Correct.
if you want interest rates to come down,
Yep.
unemployment rates need to come up.
Go up.
But
Yep.
as a lot of people would be aware of, there's always that balance that's needed where things don't start to shift dramatically
Yeah,
in a
correct.
wrong direction.
Yeah.
So I think there's a lot of, to your point about what you said earlier, just a lot of worry
Yep.
in the market about how things are going to actually unfold in the next 3 or 4 months.
Yeah, absolutely. And I think markets hate uncertainty, don't they? So,
They do.
Which kind of speaks to our next, I guess, headline there, if I want to call it those. I don't know how I feel about saying headline, but the US government shutdown has finished.
Yes.
But that has meant that there's been no government employees doing all the data reports and sending out the information that the market needs to make decisions about where they think the economy's at. which means there's uncertainty, and therefore markets have not enjoyed that.
No, I think everyone's just flying a bit blind at the moment.
Well, yeah, literally.
Even when reports do get released, which I think most of them will drop in December, there'll be gaps that we can't really account for.
Yeah, correct.
So, you know, there's a lot of mixed signal in the economy, I would say, and who knows what's going to happen.
Yeah, it's interesting. I almost feel it's a bit of a, this is anecdotal, there's no data behind this, so take it with a grain of salt. But in terms of talking to the people that we talk to, when you say there's mixed signals, to me that feels like there's a sense of two speeds, I guess.
Yeah.
So I guess we deal with a lot of clients where things are going well, but I know from talking to people that there are a lot of people out there who it's really hard for. So there's elements of like areas of the economy that are great, and then areas that just aren't. So and quite difficult for people.
Yes, and I think it speaks to just how headline numbers sometimes don't really reflect what's actually going on in the market. Because to your point, we have clients who are retired and they're doing well because markets have benefited from the good run that it's had. But at the same time, we've seen news of redundancies floating around in the last 2 months or so. We see people struggling to actually put food on the table. It's an interesting dichotomy, and as much as it affects us here in Australia, I would argue that with the recent government shutdown, Americans have actually been affected a lot more significantly. So things like SNAP, ADC, where it comes down to survival.
Yeah, it's pretty horrible, some of the things I've seen over the last month or so.
I mean, it's good that the government's back on, so to say, for the next 2 months at the very least, until the next general meeting. But there's always a lot to be unpacked, because yes, on one side you've got delayed earning reports, you've got delayed data, but that doesn't necessarily reflect the actual impact of how society's been affected. Because we saw about 700,000 federal employees just stood down for 43 days. And we know for Americans, it's if you don't have a job, you don't have a health insurance.
Yeah, correct. Also, and then, to your point about then, how does that feed in data-wise? Like, we just don't know yet, do we? So, what does that do to consumer confidence? What does that then do to GDP? All those sorts of things. So, but then that then subsequently affects markets in the context of this conversation, I suppose. But although the last month has been, I wouldn't even say concerning is probably even too strong, but just sort of watching things pull back. Yeah, correct. The third point there is that we've still had some pretty fantastic returns for the half year. It's just more, well, what does the future look like is the age-old question.
It is, and I think the long-standing sentiment to the market has been that things have been overvalued for a while now. So some correction is due, and when things unfold is, I guess, what we're looking to work through today.
I think that's the conversation I've been having with clients recently too, is that when you have a period of sort of 6 to 9 months where it's pretty much been since April, since Trump introduced his tariff board to the world and everyone lost their marbles. It's been, I guess, since then, it's been quite, there's still volatility, but it's relatively low volatility, and returns have been really strong. I guess we've been rolling through the last few months, and just looking back through history, it can't just continue like that.
No.
So it's a matter of something will happen to kind of shake things up. It's just looking at it and saying, well, does it what's the word I'm looking for? Propose like a structural issue with markets or conditions, and just trying to, I guess, assess them as they arrive.
I think that's all we can do.
Yep, absolutely. So, in terms of coming back to those things we've highlighted, the Australia cash rate and the RBA, if you want to run through what's sort of happened and what's going on with rates, but then also inflation, and then therefore, what are the likely conclusions we can draw from that?
So, unfortunately, there hasn't been any movements in terms of our official cash rate.
Yep.
And again, whether any changes will happen in the next few months is a big question mark. And I think when we look at inflation as well, inflation has certainly gone up from August to September by about 0.5%.
Yep.
And as expected, when we come to these times of the year where there's a lot of once-off spending that
Yep.
does affect inflation in a somewhat meaningful way. So, think of holiday shopping, travel.
Yep.
I think the market is starting to adopt a more conservative approach as to how they should be feeling about things. So I think a lot of people in the last few months have really been banking on changes in interest rates to determine their next move.
Definitely.
Whereas now, they're actually just saying, things aren't going to change for a while. If things do change, it might turn for the worse. We can't let it stop what we're going to do.
Correct.
And so I think outlook-wise for the next 2 or 3 months, I feel more positive about it slightly, because I do feel that these numbers might not continue to drive people in the same manner that they have been driven in the last 2 years.
Yeah, I think, which is a great thing, really, because as the stat that I continue to roll out every time I'm sitting here is that consumer spending is 60% of GDP. So consumer sentiment is actually really important to the economic outcome. So that mentality of, yes, maybe interest rates aren't going to fall, but I'm not going to let it affect my spending behaviours, from an economic standpoint is an important one. So yeah.
It is. And again, like I think everything else we're going to discuss today, it's a wait and see approach.
Yep.
But I do feel that in some respects, we're seeing the light at the end of the tunnel.
Yeah, hopefully. Yeah. Although I have a vested interest in this, but I would happily see interest rates come down further, because it means I have to pay less on my mortgage, which would be great.
Wouldn't we all like that?
Yep. However, as you mentioned before, to pick up the unemployment rate here, in order for that to happen, we're going to need to see a lift in unemployment, which is not great for those it affects.
No, and I think there's a bit of a contrasting sentiment in the market at the moment, because if you actually look through the underlying data, a lot of people have been employed in the last few months.
Yep.
And that's offsetting the quote-unquote minor reduction in employed people. But that's only up to October, whereas I think what we've seen in the last few weeks will only really be reflected in the November numbers.
Yeah, correct.
And, I think this is just a general observation more than anything, but the trend that I'm seeing at the moment is that a lot of companies are starting to kill the bloat in a way. We've had clients even affected from redundancies where they're at that point in the company where they're stuck in the middle. I would say a lot of companies are trying to trim the fat at the moment, particularly come Christmas time.
Yeah, absolutely.
So it'll be interesting to see whether the number, next time we talk about this in December, actually reflects the current sentiment.
Yep.
But technically speaking, as of October, things were looking up for people in terms of employment rates coming down.
Yeah, I know. Well, you're right. Anecdotally, there's been a lot of layoffs, essentially. But you're right. We probably won't see those for a few more months in the numbers. But I guess, obviously there's offsets across the economy. But you can definitely see some of the larger institutions. And I guess this might come to our discussion about AI around whether companies are sort of feeling that they can improve profitability or protect their earnings around is AI, what's its role to play, I suppose. So,
Yes.
But yeah, it'd be interesting to see what that means, for then looking at tracking the unemployment over sort of the middle of next year to see what's happening, whether that's are the jobs just being translated to other companies or newer entrants, or are people actually finding sort of long-term unemployment as the outcome?
I think we're at this weird precipice where normally you can tell whether it's one or the other, but I think at the moment we don't know.
Yeah, well, it's one of the, again, uncertainty, right? If you don't have the data, it's hard to make
calls or
informed.
judgments
Yeah,
about
correct.
anything.
Yep, yeah. So therefore, we're seeing that reflected in stock and asset prices essentially. All right, so US tariffs and the economy. There's probably less headlines around tariffs.
It's been buried by other more interesting things
Yep.
to date, but I suppose they're sitting at a truce at the moment with respective parties. When I say respective parties, US and China just backing off a bit.
Yep.
So reducing reciprocal tariffs
Yep.
and whatnot. But I do think that for what it's worth, it is still a big concern in the market. I think
absolutely.
what's been happening in the last few months is after the initial shock of what unfolded in
Yep.
April, the market has inbuilt some level of skepticism already, which is why I think we haven't really been seeing any dramatic movements in the market in the last 6 months. But again, it's an unfolding story, and
Well, as we all know, he's sitting there with his finger over the button to punch it when he feels like he wants to wield out some political influence, shall we say, where he just
yes.
he was going to have a tantrum and wants to get his way, then he's going to threaten tariffs, and it's a tool that's worked in the past, so why won't it work into the future?
But yes, again, unfortunately, Trump is a factor that no economist can
that's
build
right.
into a model.
Yep.
As we've seen in the last
Yep.
few months, economists have been actually going back on their word or adjusting their forecast because they don't know.
Correct. No one knows what he's actually going to do. But yeah, the US and China are obviously, I think it's a 1 year truce they've put in place, and obviously that could be undone at any moment, but I guess it gives us some sense of stability for the next 12 months.
In the short term, yes.
Yeah, correct.
But again, I think the last point that we have here is just reviewing how people feel about the US currency being a safe haven globally.
Yes, well, that's that's an interesting point, isn't it? I think it's something that's likely to evolve over the next couple of years, I guess, towards the end of Trump's presidency, and we'll see where that lands. But I definitely know there's a sense of caution for people to think about whether they should continue to hold so much in US denominated assets. And I know that that's part of the discussion we've been having in our quarterly investment committee meeting. So I think we'll have probably some news on that in the coming weeks around are we going to make any changes. So it's a bit of a watch this space, I suppose.
It is, and I think the way that you phrased it was right, and so saying that it's not that we don't see it as a safe haven anymore, but it's more so just the amount of exposure that we've had.
Yeah, correct. Well, it's like everything really, isn't it? You're trying to manage risks. So, if anyone sits in front of you and says that they know what's going to happen, you clearly don't listen to that person because nobody knows what's going to happen. But it's really just about trying to identify, what are the risks that are out there, and making sure that, you're not overexposed because risks are also opportunities. So
it's a balance.
It's a balance, yeah, correct. Exactly right. I think one of the favourite buzz stocks at the moment is Nvidia. I've got quite a few clients, but it's almost the poster child, I suppose, for the AI and correct. Yep. So stock prices have done very well, and then obviously kind of come back slightly, but performance has been great. But there are things obviously affecting this sector in the market if we want to use Nvidia as a proxy for AI.
There's definitely a lot moving in the AI space, as we all know. And I think if we're speaking about NVIDIA by itself, for example, they've just signed on a partnership with Microsoft and Anthropic.
Yep.
So that in itself is a significant move in this space where, particularly for NVIDIA, because this partnership guarantees the use of Blackwell, their new data center. So a lot of investment managers out there, although they've obviously benefited from the good run that NVIDIA's had, I think, and again, this probably speaks to the general market sentiment and why price has come down quite significantly over the last 2 or 3 weeks, is that it comes to a point where they're all just trying to realize their gain, and taking a step back. We've had, fund managers in the US pull out of Nvidia completely.
Yep.
Just concerned about what's going to happen off the back of this earnings season.
I listened to a really interesting podcast during the week from the NAB Morning Call. It was the weekend edition about this exact subject around AI and is it a bubble, and just I guess the concept of the AI companies. I guess there's this, I don't want to call it a race, but like a need to have a significant amount of capital expenditure, or what we call CapEx, to try and develop, I guess, more market share, essentially, develop the product. And I think I've seen a lot of analysts reporting saying they're uncomfortable with the level of CapEx that's getting put into place as a percentage of earnings, because it's up around 40% of total earnings is going into capital expenditure. Basically saying, well, there's no guarantee that capital expenditure is then going to generate returns and profitability, and so that is giving them some cause for concern. But also, if they don't do that, then you're guaranteeing that if AI goes where we think it is, that you are out of the race. So it's kind of like you have to, if you want to be competitive in this space. So it's just, I guess, I just found it really fascinating in the sense of, well, it comes down to, well, do you believe that, I guess, artificial intelligence can be what everyone thinks it can be? Because, there is some evidence that it may not immediately in the near-term future deliver what I guess people are expecting, and is the capital expenditure worth it? But then also, if you don't spend the money, you won't be there, so you're not going to be part of the Magnificent Seven. So it's really, just fascinating. So it'd be worth having a listen, I think, if anyone wants to go and look for it.
Yes.
Yeah.
But no, it's again speaks to the dichotomy of a lot of things that we're talking about today, and finding a balance. Because to your point, I think initially when the AI boom started, people were in the camp of this is going somewhere very quickly.
Yep.
And I think even with us, with our use of AI internally, we can see the difference of how it adjusts to things in the last few months, for example. But this is me personally speaking. I do find that I think a lot of the news about AI taking over the world is or has been blown up quite significantly, and again, it's the speed of how it's gonna go to that point, right? I don't think anyone knows, but
no,
I don't. But I also think the people who know won't expect things to change in the short term. It'll be a complete system change for everyone, really.
I find that I reach the limit of, and maybe it's just me, this is also maybe a Chris issue, probably a Chris issue, I reach the limit of its usefulness relatively quickly, or either that or I don't have the patience to persevere, or the time maybe to persevere and actually get what I want out of it. So anecdotally, that's what I get the sense from readings and listening and hearing what other people have to say about it. But let's see, right?
It's probably good on that front, because at least we'll also have jobs until
Correct.
The next 50 years, hopefully.
Yeah, well, I always feel like it's a bit of a generational thing in terms of I'm not willing to trust its outputs, but I don't know if like our kids, when they because it's just ubiquitously part of their life, is there an implicit sense of of trust? I don't know. That's a whole philosophical discussion, but anyway, I have a lot of discussions with clients, and I don't know about you, Brigitta, about is AI in a bubble? Should we continue to be invested?
Definitely a question that I get asked every day.
Yep. So just having a look, I guess the thing that's given us some sense here is if we look back at, and the easy comparator is the dot-com bubble, or the tech wreck, I guess, back in the early 90s, in terms of where are price-earnings ratios, or what are known as PE ratios for companies. So you'll see on the chart here, I guess the blue line is the 2000s, And the pink line is where we are today, and it's just for the Nasdaq during the 90s versus now. So you can obviously see that we're in the nascent phase, if there was to be one, and PE prices aren't anywhere near, I guess, what they were or got to. But then also looking at the top 7 firms in each of those periods, you can see that the PE ratios are significantly lower. So that doesn't necessarily mean to say that we don't have an issue, but does it then drive decision making around what does that mean for investment decisions? I don't think we're at that point.
No, I think again it's more concerns rather than it letting us dictate what we do with our investments. But
correct.
I think we are keeping a closer watch more than ever.
Yep.
So
the way I think about this too is that I know from a market cap perspective that these 7 companies are increasingly increase the concentration, but sorry for the bad English, but the concentration risk, I suppose, of the S&P 500 as the market cap of the big 7 expands. It just means more of the money is in those companies. But that's still, our whole investment philosophy is around diversification across the globe. So yes, it's a great topic to talk about these 7 companies, or NVIDIA, you're talking about one company. But the whole portfolio construction is about diversification across geographies and asset classes. And so, yes, it's part of the discussion, but it is not the totality of the discussion.
That's correct. And I think that's the point that we try to drill to all of our clients. Although I think most of our clients get the message these days is that we've built these portfolios or designed them the way that we have to try and circumvent issues and events like this.
Yep.
So that it never becomes an issue.
Yeah, correct. Yep. Awesome. Well, is there anything else you wanted to cover?
No, but I think everyone either keep your eyes on the computer or just shove it away and don't worry about it. You've got a choice here.
Yeah, I think at this point, most of our clients would know around our investment philosophy. Where we don't really make changes based on short-term trends. Like we will make changes with long-term themes, and I think a lot of the discussions that kind of that clients are worried about that's in the media are definitely shorter-term themes, and that is a consistent thing right through the cycle. And so it's really just about trying to dissect, does it become a clear and present threat, or is it just part of the normal movement of markets? I guess at the moment yes, there's a bit of a pullback going on, but we don't see it as a clear and present threat. It doesn't mean we're going to change anything, but there are probably some small, longer term structural things that will have come out of the quarterly update that we will start communicating to clients over the next few weeks, and people will see those changes in their portfolios. But obviously, if you've got any questions, reach out to your advisor, and we'll be happy to talk through where we sit. All right. Well, thanks for your time, Brigitta.
You too, Chris.
And you and I will probably see our viewers sometime next year with the rotating schedule.
Probably.
But, yeah. Have a great Christmas.
You too.
Okay. Thanks, everyone.
Thanks.